Good morning, everyone.
Good morning, sir.
Good morning, sir.
Good morning,
Good
sir.
morning.
Good morning, sir.
Good morning, sir.
Hope you all had wonderful weeks.
Yes, sir.
Yes, sir.
Yes, sir.
This morning,
Yes, we did.
this platform will accommodate as many people as possible. If you are not able to join, I've connected to YouTube. So as many as I cannot enter here.
Good morning, sir.
Good morning.
Okay. So I have a question to ask. Can I speak?
Speak.
I can't hear you.
Speak.
Okay.
Can hear you.
Okay, sir. Okay, sir. Okay. Coming to the comment section, I can see people writing down their matric number and their department. So I'm trying to know why they are writing, or is there anything like taking attendance in this program?
There's
Or
a way. There's a way we do that. People can write for them. I have a make. There's a way by which I would do that. But you can write.
Yeah, like okay? The thing is that this live now, we can only be 300 on this live, right?
That means you were not there when I said it. It will accommodate as many people. If you cannot join it will take you to Zoom. It will take you to YouTube. It will take you directly to YouTube. If you cannot join here, it will take you to YouTube. It can accommodate as many people that be joining.
Okay.
Is that clear?
Yeah, that's clear for me.
What is it? What do you want to do? What do you want to say?
So the other part I joined, I didn't put it in. See this girl.
So it is 8:30 by my time. I'm Dr. Shodeinde Bolaji, your facilitator for ACC 111. You are welcome to class this morning.
Good morning, sir.
Good morning, sir.
Good morning, sir. You're welcome, sir.
Morning, everybody. So can someone remind us of our major takeaway in the last class? I gave you one of the golden rule of double entry. Can someone remind us of that? The golden rule ends last.
Debit the receiver, credit the giver, sir.
Hello?
Debit
I
the
told you
receiver,
no
credit
chorus answer. Someone is, please, if you are using double gadgets that is making the thing to echo, can you please off it or you mute it so that will not be what I'm saying will not be re-echoing. So Osho Gele Rachel, can you speak to us? Rachel, unmute yourself and speak.
Good morning, sir.
Good morning.
So the rule you gave us the last time was debit the receiver and credit the giver.
That's a good one. Thank you for that. So along the line, I will give you another one today that we are going to keep. You should keep these rules by your left hand so that you always remind them. They will be useful throughout your accounting life. This is the foundation of what you need to know as an accounting student. It will guide your thinking, your operation, and processes in accounting. So today, we are looking at accounting concepts and conventions. Let me share my slide. Can you see the slide I'm sharing?
Yes, sir.
Yeah.
Yes, sir.
Yes, sir.
So I said, we are looking at accounting concepts this morning. In your own view, from your secondary school knowledge, what do you understand by accounting concepts? Anybody? What do you understand by accounting? Let me take. What do you understand by accounting concept? Anybody? Ida Doris, your hand is up. Can you speak to us? Ida Doris.
Good morning, sir.
Good morning.
Accounting concepts are like rules, like that guide the accounting principles. Like when we are studying accounting, there are the concepts of which we are to follow when dealing with accounting, sir.
That's good. Any other person?
Yes, sir.
Tony Muiz.
Yeah.
Tony Muiz.
Procedures.
Any cooker? Oh, Deka. Mute yourself, please. Sonny Muse, I'm listening to you. Can you speak to us? Unmute yourself and speak. Okay, if it's not there, so as not to waste our time. Accounting concepts. They had the broad rules. And they had the broad rules adopted by accounting professionals that guide the recording and reporting of affairs and activity of corporate organizations. In our last class, I told you that everything we do in accounting is guided by rules, by standard. As accountants, you don't just take decision or the way you feel, let it just be this way. There are rules that guide everything we do. And this morning, we are going to be looking at these concepts, what they are, and in what way they function. Those of you that your hand is still up, you can drop your hand so that you will not be confused. When there is need, I will ask question and you will respond to it. So, accounting concepts are broad working rules adopted by the accounting profession as guides for recording and reporting the affairs and activities of corporate organizations. So, as accountants, the work you are doing, in what way do you communicate or report your activity? Anybody? How do you communicate your work, your recording, your affair to the stakeholders? Anybody who can tell us that? How do you communicate your activity to the stakeholders? Anyone? Judith or Dio? Judith, unmute your mic and speak to us.
Good morning, sir.
Good
We
morning.
can communicate we can communicate by recording them and giving them like a statement for the
Like a
particular
statement. That's fantastic. That's a good one. Everything you were doing as accountants, it is through these financial statements that you communicate what to the stakeholders. The outside, and last week we discussed, okay, the last time we met, we discussed about users of accounting information. And we state so many of them: government, creditors, employees, owner of business. It is from the financial statements that we have prepared. From that is where they get their information from. That is where you communicate, or through the means through which you communicate your activity to the stakeholders. So the accounting concepts are the rules that guide you in the preparation and the presentation of your statement to all the users. So let's take them one after the other. One, we have the going concern concepts. Going concern concepts. What did I call it, class?
Going concern
Yes. As the name suggests, going concern. There is somebody who is using a double gadget. The gadget is re-echoing and it's disturbing us. So please mute it. So when we talk about going concern tells us that it is assumed that the business will go into the foreseeable future. When you start a business today, you are not doing the business with the mind that, okay, in the next 1 year, the business will stop. In the next 2 years, the business will stop. Business are supposed to outlive the promoter of the business. Business are supposed to be in existence for life, except in unforeseen circumstances that could arise. And nobody envisage or plan or pray that when I start something, it will not stand the test of time. So when we talk about going concern, you are doing business with the mind that the business will be in perpetual continuity. And when you are saying this on, or probably in your exam, you are being asked, what is going concern concept? A particular word that must feature in what you want to tell us is that it must be what into the foreseeable future. That word foreseeable future must be present in it. Business transactions are based on the presumption that the business will continue indefinitely, or at least for the foreseeable future. You must prepare your financial statement with the mind that, yes, it will not liquidate. The business will go into, will continue into the future. Is that saying, do you understand my explanation about going concern concept? Any question on that? Any question? No question. So let's continue. Patience, your hand is up. What is your question?
Okay, good morning, sir.
Morning.
So when you say going foreseeable concern future, does it mean that the business does not need to stop?
That is not what I said. I said going concern concept, that the business will go into the foreseeable future. In the future you are envisaging. That is what I mean by foreseeable future. You don't expect the business to end in 1 year or 2 years. Business is not supposed to be on a break-up basis. You don't prepare your account. That's okay, by next year, this, except that you are looking at, okay, there is tendency that this business might liquidate. But business is not supposed to be based on the fact that it will not go into future existence. That's what I said. Yes, your question again.
Okay. I've gotten it now.
Clear?
Thank you. Yes, sir. Thank you.
Any other person? Any question? So if there is none, let's go on. Balogun, your hand is up. What is your question?
Good morning, sir. My name is Tosin Balogun. So my question is that when you mean by going concepts, what's it called?
Going concern.
Yes. So for me, I was thinking that there are some business. You might say, okay, this business, I'm doing it for a year. So what I want to get there is that, is he still going on, or once you said he wants to do this business for a year and you just want to do this business for a year and you have other things doing. So I don't really get that part, sir.
Okay, can you give us an example of the business you are starting and you are saying it's just going to last for 1 year? Can you give us an example?
Okay, now I'm using an example of POS business. So now I see that the spot that I'm doing the business is booming. Maybe in like 2 years' time, I see that, okay, maybe another development stuff came around the business area and the business is not like the way it used to be. So, and I've stopped. So is it still going, or because I don't really get it?
Let me clear this. You see, when we talk about this, we are not looking at a one-man business that the business that is not registered, that does not have all the characteristics of a business. You are looking at a business organization whereby we talk about stakeholders. The one-man business you are saying, it is just his own. He can say, I'm starting, I'm stopping. But we are looking at a well-structured organization whereby they communicate their reports through financial reports. They communicate their activity through financial reports to the stakeholder. And who are the stakeholder? We are saying the business owner, business managers, government, creditors, customers, employee, and the likes. So not just the business, okay, I want to do buy and selling, let me quickly go and buy oranges in the market, sell them, and that is the end. No. We are looking at a well-structured, organized business. Is that taking?
Yes, sir.
Okay, let's continue. So another one is accounting period concept. Accounting period concept. When we talk of accounting period concept, we are looking at the period of time in which an organization prepares its account. And of a convention, accounting periods are usually 1 year, 1 calendar year. When I say 1 calendar year, I mean from January to December. Do you understand what I mean by that? The period in which you are preparing or you are reporting your activity. We cannot just start business and just continuing like that without you saying, okay, you want to report your activity. So accounting period is simply a 1 calendar year when you are preparing it. Let's say from January to December, that is 12 calendar months. So accounting activities are reported annually, and that annual is referred to what? 1 calendar year. Is that clear? Is that understood?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, not
sir.
really, sir.
What do you mean by not really? Can you speak? Our time is limited. Kenny. Unmute and speak.
Good morning, sir.
Good morning.
Sorry, sir. I don't really understand the accounting period concept. Please, can you come
The
in?
network is bad. I can't hear you.
I said, can you hear me now, sir?
I can't hear what you're saying, please. Hello?
Hello, can you hear me now?
Take that slide again.
Okay, speak.
I said, I don't really understand the accounting period concept. Please, can you come again, please?
You don't understand the accounting concept.
Accounting period.
I said accounting activity are reported annually. And when we say annual, that means 1 accounting year, 1 calendar year, from January to December. That is what we mean by accounting year. 1 calendar year can also be from April to March, can be from July to June. What we are saying is that when you count your 12 calendar months, that is what? That is a year. That is an accounting year. You don't report activity like say you want to report 3 years together. No. At the end of every year, at the end of 12 calendar months, you do what? You report your activity. That is what we mean when we say accounting period concept. Ola Nloku Gabriel, your hand is up. Ask your question. Ola Nloku, are you there? Okay. If he's not responding, let's continue. So we talk about matching concept. Matching concept. In accounting, I told you last week that you debit the receiver and you credit the giver. So as an organization, there is no way you are selling. You have your purchases, you have your sales. And you also have your cost of sales. And this your cost of sales are your what? Are your operating expenses. Cost of sales and other expenses, when you have your sales, less cost of sales, you have your gross profit, and from your gross profit, you less all the expenses, salary, rent, transport, electricity, and all of them. And you have your what? You have your net profit. So in accounting, we are saying matching concept. You should match your operating expenses as against your what? Your revenue. The revenue you have made, those expenses you have incurred in making that revenue, you should do what? You should match them together in an accounting year. And at this point, let me give you the second golden rule. For every debit entry in an account, there must be a corresponding credit entry in another account. Take your pen and write. Everybody, can you hear me?
Yes, sir.
Class, can you hear me?
Yes, sir.
Yes, sir.
Take your pen and write the golden rule. Is number 2 golden rule I'm giving you. For every debit entry in an account, there must be a corresponding credit entry in another account. Is that taken?
Yes, sir.
For every debit,
Come again, sir.
Yes, sir.
I've not come once now. Why are you asking me to come again?
Come again, sir. Come again, sir, please.
I have not come once. Don't ask me to come again.
Tell him to repeat it. Don't say come again. Okay, sir, please repeat it, sir.
Sorry, sir.
Sorry, sir.
Okay. So I said, for every debit entry in an account, there must be a corresponding credit entry in another account. Is that taken? Can somebody repeat what I have said?
For every debit entry.
I don't want correct answer in my class. I don't want correct answer. When you do that, you lose marks. I don't want correct answer, please. Raise up your hand and let me recognize you, and it will end you a mark. So, Bolu Konyisola.
Good morning, sir.
Your network is making, okay, good morning.
For every debit, there must be a correct entry.
Your network is making you to lose the mark this morning. Sorry.
Sir.
Good morning. Good morning, sir.
Good morning.
So you said for every debit entry in an account, there must be a corresponding entry in another account.
That's not correct. That is not what I said. You lose the mark. Young, F Young.
Entry in account. There must be a corresponding credit
in another account.
Young, F Young. Speak. Okay, she's not there.
Yes, sir.
Sir.
Nimotala Ajoke Shodimu, speak to us. Ajoke Shodimu, can you speak?
Hi, sir.
Ajoke Shodimu, I've told you that you don't say, you just raise up your hand and I will recognize you. I've given you the rules from day one.
Good morning, sir. I'm here.
Good morning. Is that Ajoke Shodimu?
Can you hear me?
Is that Ajoke Shodimu?
No, this is Emedion.
Emedion.
Yes.
Okay, Emedion, speak.
Okay. You said for every debit entry in an account, there must be a corresponding credit entry in another account.
Fantastic. You have earned your second mark this morning. Communicate to me after and let me document it. So what we are saying in essence is that from let's go back to the number 1 golden rule I gave you. You debit the receiver and credit the giver. What we mean, let me explain to you what we mean by saying that for every debit entry in an account, there must be a corresponding credit entry in another account. Dr. Shodeinde, from an example we gave the last time, Dr. Shodeinde purchased an iPhone from Ajoke. Let me change the name now. Dr. Shodeinde paid Ajoke 1 million naira. In Ajoke's account, what is he going to recognize? Is it going to debit or credit?
Debit.
That means Ajoke is going to debit for collecting the money. In the account of Dr. Shodeinde, what will happen?
Debit. Credit.
That will be credited. That is what we mean by saying for every debit entry, Ajoke will debit his own account, collecting the money. Dr. Shodeinde will credit his own account for what? For giving out the money. Do you understand what we mean by saying for every debit entry, there must be a corresponding credit entry in another account? Is it clear?
Yes, sir.
Yes, sir.
So, our matching concept, we are saying that you are matching your operating expenses and your what against your revenue. So, this is how you arrive at your what? At your profit or loss in an accounting year. You should be able to marry or relate your expenses with your revenue. Any question on that? Any question on the matching concept? Those of you that your hands are up, you can drop them so that we know the people that want to ask a fresh question. So everybody drop your hand so that we know those who want to ask fresh questions. So if there is no question on matching concept, let us.
Hi, sir. I have a question, sir.
Okay, the first person should speak.
This is Taiwo Ireti. Good morning, sir.
This is who?
Taiwo Ireti.
Taiwo Ireti. Okay, speak to us.
Okay, so you were saying that for every debit entry, there must be a corresponding credit entry in another account. And in the case of you and Ajoke, you said Ajoke will be debited because of the money received, while you will be credited because of the money out of your account.
Yes.
Okay, that only applies in accounting rule, right?
That is the golden rule in every business transaction. You are recording 2 activities, at least 2 activities. Okay. That is the rule, and it is applicable. You will see it, you will meet with them. That rule will be applied in all your accounting processes, activities, and during your accounting year.
Okay.
Is that taken?
So that means that you as a person that paid the money for the iPod, you will be credited. That's a credit on your part.
The account from which the money is going out will be credited, and the account at which receiving the money will be debited.
Oh, okay. Thank you, sir.
You will. This is just the foundation. We are giving you the theory. By the time you are doing double entry, you will have a better understanding of all these concepts. All these concepts will be put into practice for you. So you will have a better understanding. So let's look at the new recognition concept. So what the concept is saying is that in every specific period, in an accounting period, you must be able to recognize. It's based on realization principle. What you have recognized in a particular year, what you have collected as your revenue in a particular year, you must be able to document it. We have told you that accounting is 12 calendar months. For instance, I am paying for rent for 2 years. I paid 1 million naira for annual rent, and I decide to pay to my landlord 3 million naira. The 3 million naira is for how many years?
3 years.
3 years.
3 years, sir.
3 years. So in the preparation of my account, I will record 3 million naira in my cash book. But in rent, the rent I will recognize for that year is what? It's 1 million naira, which is meant for what? For that 1 year. Do you understand?
Yes, sir.
So I have paid 3 million naira.
No, sir.
I will explain again. I said we are looking at revenue recognition. let me use an okay. Let me still use the example. I said I paid 3 million naira for rent, and my annual rent is 1 million naira. So the cash that has gone out of my account is how much? It's 3 million.
3 million naira.
But for the purpose of accounting record, my rent for that year is just 1 million, and that is what I will do. What I will recognize. Is it clear?
Yes, sir.
When you are selling,
Yes, sir.
When you are selling to somebody and you are collecting money, and you still learn about cash basis and accrual basis of accounting. Later, you will deal with that. But for the purpose of revenue recognition, you are recognizing your revenue for that particular period. If the transaction you are carrying out is not for that period, you don't recognize it as your what? As profit in that particular year. Somebody wants to purchase something from you, and the good he wants to purchase is not ready. He has given you money. So you don't recognize the money until when
He has given you.
You recognize the money as what has been earned, but the activity which has earned the money has not done what? Has not been put into process or has not been recognized. So that is what we mean by revenue recognition. It's primarily based on the realization principle, which clearly states that in identifying revenues within a specific period, one must look to the time of various transactions rather than what? Cash flow. When the transaction has occurred and not when money has what? Exchanged hands. Is that clear?
Yes, sir.
Yes.
So I have a question, please.
Ask your question.
Because of the network, I didn't get clearly. You said if you pay 3 million naira for a rent, and the 1 million naira is for a year, so the 1 million naira will be recognized. So what happens to the 2 million naira, sir?
They will be recognized as advance. It is
advance payments.
Until
it will be recognized as advance payment. So it is to your account. The owner, the landlord is owing you. The landlord is owing you. So for revenue for that year, you have only paying how much? You have only paid 1 million naira for rent. So the other 2 million naira is taken as an advance for you. You have advanced that person.
Okay, sir.
But for purpose of accounting, that year you have only paid 1 million and not 3 million naira. If you record 3 million naira as rent, you are telling us that your rent for that particular year is 3 million and not 1 million.
Okay. All right, sir. Thank you, sir.
Sir, please,
Yes,
I have
sir.
a question.
Sir, please, I have a question.
Ask your question.
Okay, concerning that the receipt that you said you debit, if the landlords debit writes on the receipt 3 million naira, there are some landlord that actually wrote it out like that. Like, okay, let me use my auntie like a sample. She actually paid like in 2 years time, but on the receipt there is a note that it pays in 2 years time. In that essence, what does it mean? Because they not only recognize 1 year, meanwhile it's 2 years that was on the receipt. So I don't get the part clear because I'm kind of confused.
No, don't be confused. I will explain again.
Okay, sir.
By the time you look at various accounts, you have your cash book, you have your ledger, you have your journals, you have your purchases day book, you have all the accounting records. In your cash book, you record every money you have collected. But in the preparation of accounts, that shows your activity for that particular year. If somebody has paid you 3 million naira, Dr. Shodeinde has paid you now 3 million naira for rent. And you know that the rent is 1 million naira per year. The other two, if you have collected 3 million naira, you know that in year 2, you are not collecting anything. In year 3, you are not collecting anything. So the money you have collected, some of them belong to future years, you only recognize 1 million naira for year one. Though you have given as evidence of payment your receipt, 3 million naira you have collected. But in the preparation of your account, for you to be prudent, what you do is that you recognize 1 million naira for year one. The 2 million naira you have taken in advance, you recognize another 1 million naira in year two. And in year three, the last 1 million naira. So you don't just say revenue from rent is 3 million. No, you are overestimating your income from rent. Your rent for that particular year is how much? Is 1 million and not what? 3 million naira. So when you now get your statement of financial position, you now recognize 2 million naira as what? As liability. That's okay, you have collected this money and you are owing it to somebody. It is not your money for that year. You go and put in your account that 2 million naira you have collected in advance. The second year, when you are now preparing your account, you recognize 1 million naira as rent and you reduce your liability to 1 million naira, showing that the remaining 1 million naira is for another year. Is that clear?
Yes, sir. Thank you so much, sir.
I hope you understood very well now.
Yes, sir. Yes,
I have
sir.
a question.
Ask your question.
Okay, sir. So please, the money you said that we are not to record yet, sir. Please, in the following year, how do we record it? Do we?
I've just explained it now.
It was paid on last year.
That means we are not listening.
Hello?
I've explained. Let me explain it again and listen very well now. What is your name? What's your name? What? Your network is bad. I can't. What?
Okoli Chioma.
Okay, Chioma. Dr. Shodeinde has paid Chioma 3 million naira. Being rent for 3 years. So in year one, in your receipts, you will write 3 million naira collected from Dr. Shodeinde as rent. Is that clear? Chioma, are you there?
Yes, sir.
You have in your receipt, you have issued 3 million naira. That is the amount of money you have collected. So in your account, in the preparation of your account, for that 1 year, you will write in your account for rent. You have ledger for all of this. When you open ledger for rent, what you are going to recognize as money you have collected for rent in that particular year is how much?
1 million, sir.
1 million. The remaining 2 million naira, you will write it in your statement of financial position as what? As liability. That means you are owing that 2 million naira. It's not your money, yes. You only recognize out of the 3 million naira, you recognize 1 million naira, and you put the remaining 2 million naira as what? As being the liability.
Okay.
So the second year, when you recognize rent again, how much will be remaining in your statement of financial performance? Position, sorry.
2,000.
It will now remain 1 million because you have transferred another 1 million naira to your what? To your rent account. So the liability you have in your account will now be reduced to what? To 1 million.
1 million.
So in the third year, when you now recognize 1 million naira on rent again, then the liability you have there will be 0. You have exhausted all the money. Is it clear? Chioma, is it clear?
Yes, sir.
Okay.
Yes, sir. Good morning, sir.
Good morning.
Good morning, sir. Sorry, sir. There is something that I wanted to clarify, sir. It's about this the golden rule, the first golden rule of accounting. Many people still misunderstand.
No.
Many
Tell
people
me
still
what the golden rule
misunderstand.
says.
The golden rule says that
I say okay.
The first golden rule says debit the receiver, credit the giver.
Yes.
This thing, plenty people is like, okay, if like that example of Shodeinde and okay, Shodeinde is the person that sent the money and the person that received. They're not like the person receiving it. Why is it that is the giver?
He's the one that debited him now.
It means that the person, yes, I mean, debit is an increase in asset. That is why he is the receiver. Then the credit is a decrease in
you that is talking, unmute yourself and continue. I choose to mute everybody because some people are talking underneath. Unmute yourself and continue your conversation. Okay.
Thank you, sir. Debit is the receiver because he received an asset, which in accounting, debit means an increase in assets, while credit means a decrease in assets. So the person selling the iPhone, it means that the person decreased in an asset. That is why the debitor, the debit is the receiver because he has an increase in asset, which is the iPhone. That is it, sir. That's what I understand in this debit receiver and credit the giver, sir. Thank you, sir.
Okay. What was Chioma Abi? Is that Chioma?
No, sir.
Hello?
Dagana, sir.
Dagana.
Dagana, okay. Sir.
When you started your conversation, said it's confusing some people. You never said yourself.
Yes, because
how do you know those people that are being confused? You will talk about yourself. That, sir, this thing is confusing. You don't say some people. You understand? If someone is confused,
yes, sir. Thank you,
I've given my number. Let the person call and I will explain. But what you have said, let me explain it now. Let me explain to you. What you said is correct. An increase in assets and decrease in assets. I have said that Dr. Shodeinde paid 1 million naira. I'm talking about cash now, not assets. Get it clear. When you transfer money,
okay, sir.
When you transfer money, what is happening to your account? The account is reducing. Is that clear?
Clear, sir.
So that is your account is being depleted. Is that do you agree with me?
Agreed, sir. Agreed, sir.
But you, Dagana, that is collecting the cash, what is happening to your own? Is it depleting or increasing?
Sir?
The cash I've given to you, 1 million naira for the purchase of phone. I've given you 1 million naira. Is your account depleting or increasing?
It's decreasing, sir.
When you collect money from me, I gave you 1 million naira. Is your account depleting or increasing?
Okay. It's increasing. It's increasing,
so you can
sir.
see that the same thing you have explained. It's the same thing I've told you now. You agree with me. The money you have collected is increasing your own account. Dr. Shodeinde that has given it is what is depleting his own account. Is it clear now?
Yes, sir.
Just understand the rule and you will not have any issue. When you receive money, you do what? You debit your account. The person that has given you money, the account will be what? Will be credited. Is it very clear to you now?
Very clear, sir.
Fantastic. Let's continue.
Thank you, sir. I have a question.
Sorry, sir, I have a question.
Hello, sir.
What is your question?
I am sorry. I want to take you back to
your name first. Your name?
My name is Nelson Obio.
Okay, Nelson, speak.
Permit me to take you back to the accounting concept, the number 4, this revenue recognition concept.
Yes.
So in the course of an exam, you know, the definitions that we have from the module and the one that you gave is kind of contradictory. Not really contradictory, but I'm asking now, if in the course of exam, if we are asked to define revenue recognition concept, can we use the explanation you have given us and it will still be accepted? Or we must just write what is embedded in the module?
Don't confuse yourself. What you see on my screen. Okay, let me go back to it. Revenue recognition. This definition is taken from your module. Read what you have in your module, if you have the module with you.
Okay.
You said the definition I gave is contradicting to, and that is not correct. This definition is taken. The definition in your module is the correct definition. And this is what I'm projecting to you now. Read what you have in your module.
Yes, I understand now, sir. But in the course of exam, the explanation you have given
No. You are not. Let's agree. You don't say what is wrong or what you don't know. You said the definition I gave is contradicting to the one in your module. And I've just told you. Just hold on. And I want to tell you that the definition in your module is the correct definition. Okay. You will see in any book. And it is the same definition I am projecting here. What is contradicting in it?
It's not contradictory.
But that is the word you use. You said what I gave and what is in module is contradictory.
I take back my words, sir. I want to ask if from the explanation you gave us that we all have been contributing to, if in the course of exam, if we are asked to define this revenue recognition concept, can we use the explanation, the same way you explained to us, to answer the question? That's what I want to know.
In exam, you will not be asked, because you are doing MCQ, multiple choice question. The answer will have been supplied to you. When you say, what is revenue recognition concept? The answer will have been supplied to you. You don't speak. We are not asking you to now say, okay, start explain. I only use that explanation for you to understand. And which many of you has alluded to the fact that, yes, they understood my explanation.
Yes, I
the
understood.
particular problem you're having, say it now and let me clarify it. Where are you being confused?
No, I'm not being confused. I was thinking our questions will come in, like you should define and all. So
no. Let me help you here.
Sorry, sir, can I say something?
Okay, let me hear you.
Okay.
Is it in regard to what he's saying?
Yes, I want to just clarify something.
Okay.
Okay, I think he's getting it all wrong. This definition here, most of us will read it and will not understand. So the purpose of us having a lecturer is for him to also explain, for us to understand more better. Most times we read and we don't understand what it means. So that is the essence why he's here, to break it down for us to understand. So I feel the definition here and what he's saying is the same thing. It's just for you to understand. That is just it. That's what I want to say, sir.
Okay. So, our friend, are you clear now? Or you still have doubts in your mind concerning this?
No, I'm clear.
You are satisfied?
Yes, very well.
Okay. The definition you have in your module is the same definition. I've only used examples to explain it to you. That's why I used the issue of 3 million naira, that in year one you recognize 1 million and you have the remaining 2 million naira in your statement of financial position. Is it clear? It's just a way of making you to understand. That is it. So, any other question?
Yes, sir. This is NSV voucher.
Okay, Viva, ask your question.
It's about the golden rule. So I realized that if I make a transfer from my bank, from my account, they usually debit me and then credit the person receiving. So I don't understand why is that, since the golden rule says that.
Just hold it. The explanation to your answer, if I have to give you now, we will not be able to finish what we have for the class. But I will take time to explain to you very well. I will explain it very well. The summary is just that when you pay money into your account, the bank will credit you. It is just because the bank is crediting you because into their own account, it is a liability unto them. They are not the owner of the money. You understand? They are crediting your account with them because it is a liability unto them. The golden rule we are looking at now, it's you preparing your own accounts now. When we get to bank reconciliation, we'll explain to you in detail what that means and you have a better understanding. So just let's take it.
Okay, sir. Thank you.
The summary is that to the bank, it is a liability unto them. That is why they are crediting your account with them. You understand? So let's continue.
All right, sir.
So that's
Yes,
that
sir.
is
Hello, sir.
Hello.
Good morning, sir. This is Idowu Oluwapelu.
Idowu, speak.
Yes. So you said the credit is the giver, why the debit is the receiver, right?
Yes.
I want to get something. Is it that you said the credit is the giver? That means the credit is the one giving out, why the debit is the one receiving? I'm not trying to say, is it that?
Time we did some. Were you in class this last time?
No, sir.
No. Okay.
I was unable to
the
join.
video has been, and listen to the video. We have just 10 minutes to the end of the class, and I don't like to stay beyond my time. Well, we'll finish off this today. And listen to the slide, to the video I sent, so that you won't drag us back. So let's continue back. So we look at prudence concept. Prudence concept. This concept tries to ensure that all uncertainty and risk inherent in business are adequately provided for. So let me explain it. You know, as accountants, you underestimate your worth, your revenue, and overstate your liability or cost. You are selling. Let's use an example of egg. You are selling crates of eggs. And in your account, in your store, you are having 1,000 crates of egg at 1,000 naira per crate. On that 1,000 naira, your profit is 100 naira. So by the time you want to say, okay, I have 1,000 crates of egg at 1,000 naira, which is 1 million, and my profit on it is 100 naira. Can you say emphatically that at the end of selling all these crates, my profit will still be 100,000? Can you say that?
No, sir.
Why?
No,
Why
sir.
will you not say? Why will you not say so?
No, sir.
No, sir, because in essence of that, you have lost
one person at a time. Just raise up your hand. Let me recognize you so that you have a better understanding.
Because of hello, sir.
Mercy, Monday, can you speak? Mercy.
Okay, yeah, because of some uncertainties and risk.
Are you Mercy?
Oh, sorry.
Good morning, sir. Yeah, I'm Mercy.
Speak.
So you cannot ensure that you are going to have that profit, that exact profit, because of the uncertainty in the business. Some eggs might get broken during the period of business, thus you might not be able to reach that stipulated profit in which you have already bargained at the beginning.
That is fantastic. So you are envisaging what? The risk inherent in your business. You know that along the line, some might go bad, some might be broken. So that is why we say about prudence. An accountant must be very prudent. So when it comes to cost, you recognize your cost or your liability. Then you don't overestimate your revenue. You can't say that for sure. At the end of the year, I will sell all of this egg 1,000 and I will have 1 million. That is why we mean by you have to be prudent. In doing all of this, you recognize all the risks inherent. This egg, some of them might go bad, some might get damaged. You can't just say 1,000 times 1,000, 1 million. That's no. So, but every loss that might be envisaged, every risk, you recognize them. You recognize them. You want to go from Lagos to Ibadan, and you have said, okay, driver, take money for fuel, 10,000 naira. You should be conscious of the fact that you can get to Lagos Ibadan Expressway and there is traffic jam. And in 1 hour, the guy is still on the same spot. That fuel of 10,000 naira might finish on that spot. What happened next? Then he needs to buy another fuel. So the 10,000 naira you have envisaged will not work. Take the driver to Ibadan. In that case, you need to make provision for what? Extra cost of fuel. That's what we mean by every risk, every cost, you do what? You overestimate them. You don't say, from Lagos to Ibadan, cost of fueling, 10,000, and you just take it like that. Until when it gets to Ibadan and the person is able to tell you, I spent 10,000 naira on fuel. That is when you can recognize that as cost. A lot of times say, okay, the 10,000 naira you gave me, traffic jam, I have to buy another 5,000 naira fuel. The cost of fuel will not be how much? 15,000 instead of the 10,000. You don't restrict yourself to say, no, it's 10,000 naira I must spend. You make room for what? For unforeseen circumstances. Is that clear? Any question? Okay. I hope that is well explained. So let's look at consistency concept. Consistency concept. This means that accounting method adopted should not be changed from year to year. When you have adopted a particular method of preparing your account, you must stick to it. And peradventure there is going to be change. There must be a note to that account where that must be changed. Let's take, for instance, all of you, you know what we call depreciation. You can give me the definition of depreciation. Raise up your hand, let me call you, and you say it. Definition of depreciation. Anybody? Or what is depreciation, not definition? Don't explain what you mean by depreciation. Anybody?
Hello, sir.
Your name?
Hello, sir. My name is Miriam Aliu Adejoke.
Okay, Adejoke. What do you understand by depreciation?
Yeah,
and
I
tell
understand.
me. Okay, speak.
What I understand about depreciation is that assets, that's reduction in the value of assets.
Fantastic. That's a good one. It's the wear and tear of an asset.
Wear and tear of an asset.
You have earned yourself 1 mark.
Thank you,
Communicate
sir.
to me at the end of, and let me record it.
Okay, sir.
We say consistency. Let me take depreciation, for example. We have different methods by which we prepare depreciation. We have straight line method. We have reducing balance. We have some of the digits method. If in the first year you have chosen straight line method of depreciation, in the second year you are meant to stick to that particular method you have adopted. And not that this year one you are using a straight line method. Second year you are jumping to reducing balance method. The third year you are using some of the digits method. No, this concept says that whatever method you have chosen in the preparation of your financial report, you have to work, you have to stay with it. Consistent use of the same method and basis from one period to another enhance the comparability of financial statement. If you are using a particular method in year 1 and you want to use another method in year 2, we will not be able to compare your account from year to year. That is what we mean by consistent. You must be consistent in what you are doing, in your method, in your basis of accounting. Is that clear?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So I'm coming. Full disclosure concept. The financial statements are the basic means of communicating financial information to all interested parties. These statements are the only source of assessing the performance of the enterprises. I have said that when we started, that the means by which you communicate your activity to stakeholders is through what? Through financial statement. And full disclosure is telling you that all losses, every information about your activity must be documented. It is not necessary that the disclosure should be full, fair, and adequate. Your information must be full, must be fair, and must be adequate. You should not hide anything. You must be able to disclose every activity. If it is loss, you don't say, I don't want my employer to see that, no, we are making loss. We should remove some expenses. No. Excuse me. You must disclose every information, every expense, irrespective of you are making profits or you are making loss. So that is that. So let me just finish, then you ask your question at the same time. If you have questions, just document it. I will finish up within the next 5 minutes. Materiality concept. Materiality primarily relates to the relevance and reliability of information. An item is considered material if there is a reasonable expectation that the knowledge of it will influence the decision of the user of the financial statement. What we are saying is that we just mentioned that full disclosure. So any material fact within your accounting period must be disclosed. For instance, during the year, you have a case in court. A customer took you to court, and the customer is asking for 10 million naira. So, pending the determination of the court case, you cannot say, oh no, the 10 million naira should not be recognized. Because it is material. 10 million naira is not small money to your business. So you must be able to put it in your account, even as a note that yes, there is a pending court case in which 10 million naira is being asked for. So you make that provision and let it be disclosed. So if at the end of the day, the judgment is in your favor, then that will be written up. If the judgment is in the favor of another party, then you know you are paying 10 million naira. So such information must be what? Must be disclosed in your account. So let's look at basis of accounting. Basis of accounting. I told you during the course of my explanation that we have cash basis, we have accrual basis. And it is based on that accrual basis, I was saying that when you collect money, you recognize all the money in your what? In your cash book by issuing receipts. But the one that relates to that particular year is what you are going to put in your financial statement. Let's look at cash basis. In this basis of accounting, no entry is made when an income is earned. When an income is not earned or an expenses incurred. What we are saying in this basis of accounting, no entry is made when an income earned or an expenses is incurred. It will be recorded in the book only when the amount involved is received. Let me explain it. On cash basis, you only recognize a transaction when you receive what? Money. Not when the account is there. Like the example I gave. 3 million naira for rent. In cash basis, you recognize all the cash. You recognize all the cash taken. So when you sell to somebody and the person is not paying immediately, you don't recognize the transaction except when cash is received. And when you bought something and you are not paying, you don't recognize that. It is when money exchanges hand, that is the only time you do what? You recognize that expenses. That is on cash basis. Accrual basis, under accrual based system, the financial effect of transaction is recorded in the book as and when occur and not when the amount involved is received. So when you are owing rent in year one, you are not paying rent. It is still recorded in your account that says you are owing rent for that year. But in cash basis, you don't recognize it until when cash is what? Is paid. I hope you understand, class. I hope you understand my explanation on the basis of accounting.
No, sir.
You don't. Let
Yes,
me
sir.
explain again. I said cash basis. You only recognize transaction when cash moves in your hand. You have rented an apartment for your business. And you are saying you don't understand and you are disturbing the class. Is that because you do not pay rent for that particular year? You don't record rent in your account. It is only when you make payment for rent that you recognize rent in your account. But in accrual basis, the fact that you are not paying rent does not mean you will not recognize. You still recognize the fact that yes, are owing rent for that year. So you only recognize a transaction when you pay cash. Is it clear now? I'm not hearing anything.
Yes, sir.
Yes.
Yes, sir.
So let me just finish.
Sir, please come again.
Yes, sir. It's okay, sir.
Yeah, we understand, sir.
Sir, I don't understand, sir.
Sir, please come again. Sir, please come
Ask
again.
your question when I'm done. I'll soon finish now. Then we'll talk about capital and revenue. We talk about capital and revenue. Some items are capital in nature. When you buy a motor vehicle, that is an item that is capital in nature. Tribalance shows the final balances of all ledger accounts. All items appearing in tribalance are transferred either to the statement of financial position or statement of financial performance. As a rule, the item of revenue nature are taken to statement of financial performance, and the item of capital nature are shown in what? In the statement of financial position. Let me ask this, and if you know it, just raise up your hand and what? And give me. Dr. Shodeinde make payment for rent 1 million naira. At the same time, Dr. Shodeinde purchased a motor vehicle for 10 million naira. The payment of rent, into which account will it go? The payment of motor vehicle, into which account will it go? Is it statement of financial performance or statement of financial position? Anybody, if you know, just raise up your hand and tell me. Sunday John.
Network is bad, sir.
Sir, please come
Sunday
again,
John.
sir. I don't understand the question, sir. Please come
I don't
again.
understand the question. Dr. Shodeinde has made payment for 2 items. Rent, 1 million naira. Motor vehicle, 10 million naira. Which one is revenue and which one is capital in nature?
Rent is revenue.
Rent is revenue.
Sir, rent is revenue and the car is capital in nature,
And the car is capital in nature.
Rent is revenue.
Rent is an expenses, but it is used for, it is an expenses which you put in your statement of financial performance. And motor vehicle is an item of capital in nature that goes into your statement of financial position. So revenue, when you collect revenue, okay, let's say I've collected rent now. No, it is an item, it's an item of revenue nature. Whereby motor vehicle is capital. That is why we are saying. So let's look at the distinction between capital and revenue. At the same explanation I have given you, the benefit of this expenditure is not exhausted in 1 year. When you buy motor vehicle, the motor vehicle can be used for several years. That is why we say it's not an expenditure that the benefits will be utilized in 1 year. But revenue expenditure, the benefit will be what? Will be used in 1 year. Your rent is usually for 1 year, maybe from January to December, from May to June, from June to May, or from May to April. That is what we mean by that. Capital expenditure are usually goes beyond, benefits goes beyond a year. Yeah. Revenue expenditure is also for what? For just 1 year. So that is our topic for today. And different revenue expenditure. These are expenditure that when you do them, you defer them. It does not end in 1 year. It does not end in 1 year. Like the rent I mentioned, when you pay rent for 5 years, you defer the remaining expenditure, only recognized for 1 year, then the remaining one are what are being deferred. That is our topic for today. Ask your question so that you can go for the next class. Question.
Good morning, sir.
Good morning.
I thank you so much for the lecture.
You're welcome.
I'm sorry, I want to take you back to the golden rules of accounting.
Quickly.
Okay. I want to ask this question. In terms of stores, supermarkets,
yes,
when you go there to purchase some items, and probably you don't hold cash, you have your ATM card, you want to pay through POS. By the time they debit you and they give you the sales, how do we categorize that? They debited your account, they gave you sales.
You know what you are going to do for me. What's your name?
Joseph Ime is my name.
Joseph, cast
Yes,
your
sir.
mind to the fact that you are not, somebody has asked this question, that when you pay money to the bank, they credit you. And I've explained that the bank is doing that because the money they are holding for you, the money in your account is not their own. It is a liability on their part. So for now, restrict yourself to where that you are paying cash. You are paying cash. That one will give you a better understanding of what we are saying. When we get to bank reconciliation statement, we'll explain this to you in detail.
Okay.
So when your bank, when you pay money to your account, they credit you.
Yes.
The bank is crediting you because it is a liability to them. It is not their money. It is the other way around. You understand? It is the other way around. The bank is holding the money for you in trust. It is not their own. In your own, when you pay your money, okay, let us look at cash book. When you pay money into your account, what do you do into your cash book? You debit your account. Is that so?
Yes, sir.
When you withdraw money from your bank, what do you do into your account? You credit your what? You credit your cash book. Is that taken?
Yes, sir.
Yes.
It's the same
Hello,
thing.
sir.
When you get to do all of this, you understand them better. You understand them better.
Okay.
Any other question? Our time is spent. I don't want to delay.
Hello, sir. Good morning, sir.
What's your name? Your question. Your name and your question.
My name is Olamaria Ruth.
Ruth, speak.
Yes, sir. Okay, sir. Please, I want to ask that liability, is it expenses?
Liability.
Yes, sir. Yes,
liability is the money you are owing to somebody.
Okay.
It's money you are owing to somebody.
Okay, sir. Thank you, sir.
So,
Good morning, sir.
Any other question?
Good morning, sir.
Good morning,
Your name
Good
and
morning,
your question.
sir.
Okay, what's your question?
Yes, sir. Thank you, sir. Based on the full disclosure concept, sir, what happens when transactions that do not involve cash transaction are not recorded based on the cash flow accounting basis?
Okay. So that is just a basis of account. On the basis on which you record your transaction. On that cash basis, if you have not collected money, you are not what? You are not recording it.
Okay.
Is that
Good morning,
taken?
sir.
Yes, sir. Yes, sir.
And this will be the last one we take because we are exceeding our time. Some people
Thank you,
have
sir.
some other class now. So your name and your
Good
question.
morning, sir.
Good morning.
My name is Olakpelumi.
Pelumi,
The
speak.
accrual basis, I did not get the explanation well.
Accrual basis. Okay.
Yes.
Did you get the explanation when I talk about I paid for rent?
For rent, yes.
That is accrual basis. When you have made payments, the money you have paid is not just for 1 year. It will be recognized and posted for other years.
Hello, good morning, sir.
That money is
Hello, good morning, sir. Good morning, sir. I have a question over the capital and revenue.
Okay, ask. Hello, class. Hello.
Hello, sir. Hello, sir.
Sorry, I will not be able to entertain any other question. You have my number because I don't want to disturb those who are going for another class. Call me and ask your question or you send me message. For the benefit of those who are having another class, we are going to end it now. Governor, my number.
Can you give us?
Okay, my number is 080 23 358 387. 387. 08023 358 387.
Thank you, sir.
Thank you, sir.
So have a wonderful time and enjoy the rest of your.
Is that your WhatsApp number?
Yes, that is it.
You too, sir.
08023358387. So that's Governor. Are you there? That's Governor.
Yes, sir. I'm here, sir.
Any comments from you?
We are good to good, sir.
Okay, that's good. So I hope all the classes are represented here. Accounting, are you there?
We
are here, sir. Finance, are you there?
Yeah, yeah.
Okay, students.
Business are here.
Economics is here, sir.
We are here, sir.
Are you
Business
there?
administration.
We are here, sir.
Business education, are you there?
Oh, she married nobody.
Yes, sir.
Okay, thank you for your time and have a wonderful classes ahead. Good day.
Thank you, sir. Have a great
Bye-bye,
weekend.
everybody.
Thank you, sir.
Bye, sir.
Thank you for taking us.
Thank you, sir.
Thank you, sir.
Thank you, sir.
What's your name, sir?
I'm Dr. Shodeinde Bolaji. I'm Dr. Shodeinde Bolaji.
Okay,
All right.
thank you very
Thank you,
much.
sir.